you know that 93% of your portfolio's returns comes from where you invest, not what you invest in? Shocking, right? And with so many options like stocks, gold, real estate, or funds, how do you decide where to put your hard-earned money? Let's dive into a decade of data to uncover the ultimate winner among asset classes. Who knows, this video might just change the way you invest forever. Welcome to holisticinvestment.in. In today's video, we are not just talking about investing, we are giving you a master class in asset allocation. So why is this so important? Because research shows that your asset allocation, not market timing or fund selection, decides 93% of your returns. Yep, you heard that right. So buckle up. We are analyzing how government bonds, gold, real estate, and stocks across large cap, mid cap, and small cap categories performed from 2015 to 2024. Ready? Let's go. So government bonds are the definition of safe and steady. Over the past decade, they delivered average annual returns of 8.12%. Sounds decent, right? But here's the catch. Inflation eats into those returns. So inflation in India has hovered between 6 to 7%, meaning your real returns are barely 1 to 2%. And guess what? Some years returns dipped as low as 2%. So if you are thinking about long-term wealth creation, bonds might not be your best bet. They are better for short-term goals or even for emergency funds, but not for long-term wealth creation. So there is a quick fact. Like corporate bonds perform similarly with slightly higher risk, and fixed deposits, it gave you average return which range from 6.5% to 7.5%. Now let's talk about gold, the traditional favorite. So gold has been the go-to safe haven for centuries. Over the last 10 years, gold delivered an average annual return of 10.58%. Impressive, right? But let me ask you this. Did you know gold had 2 years of negative returns and 2 years of single digit returns in the last decade? Yep, it's not all glitter and gold. And if you're buying physical gold, you're losing 12 to 15% to GST, making charges, and wear and tear. So here's a smarter option. Gold ETFs or gold savings fund, they are cost effective, transparent, and eliminate any unnecessary charges. Okay, now let's talk about real estate, the sleeping giant. So most of us think it's the king of wealth creation, but here's the truth. Urban apartment prices grew at an average annual rate of just 3.94% over the last 10 years. Surprised? Rental yields were equally underwhelming and around 2.5% to 3%. But there's a silver lining. Land investment in emerging areas could outperform thanks to population growth. Still, for most investors, real estate is better for wealth preservation than wealth creation. So now let's talk about the stock market, which is risky but yet rewarding. So large cap stocks is a stable performer because large cap stocks delivered average annual return of 13.6% over the decade. In 3 years, they even crossed 25%, but they also had 1 year of negative returns. Now let's talk about mid cap stocks, the overachiever. So here's where things get exciting. Mid cap stocks averaged 20.73% returns, higher than any other asset class. So 5 out of 10 years saw returns above 25%. Now small cap stocks, which is kind of a roller coaster because small cap stocks were a close second with 18.98% average annual return. But be warned, they had 3 years of negative returns, more than any other category. The lesson? The stock market is risky, but if you stayed invested long term, the rewards can be phenomenal. So now here's a quick question. What if you spread your investment equally across bonds, gold, real estate, and stocks? Because diversification is the secret sauce. Your average annual return would have been 11.30% if you had diversified your investment. So that's the power of diversification. Let's break it down through the tabular column you can see now presented on the screen. So here you can see that mutual funds take diversification to the next level. So here's how they performed in 2024. So large cap fund gave 15 to 17% of returns, and mid cap funds gave 19 to 22% returns, and small cap funds gave 20 to 23% return, and multi asset funds gave 12.75 to 17% return. So why are mutual funds so effective? Professional management and diversified portfolios. That's why. Plus, they are beginner friendly. So, who's the winner? It depends on your goals. For safety, go with bonds. For moderate growth, choose gold or real estate. For high returns, stocks or mutual funds are your best bet. But here's the golden rule: don't put all your eggs in one basket, diversify. Still confused about where to invest? Don't worry. Hit the link in the description to book a complimentary investment plan consultation with one of our certified financial planners and discover how to turn your 1 lakh into 1 crore. So your financial freedom starts here. So let's build a future you deserve together.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.